What's up, guys? Welcome back to DCA. So what we're going to do in this video is talk about where Bitcoin's at right now and why there's a critical level just below us that I think if we fall below it could lead to a period where we start to fall to some of these more severe price levels that you hear people talking about. So we're going to look at this level. We're going to look at how we've interacted with it in the past. And if we do happen to drop below it, where could we potentially head to? So the first thing we'll do is we'll start by talking about the 20-week moving average. So this is a level, this green line here, which we talk about a lot on this channel. And that's for the fact that this price level, this 20-week moving average, historically acts as a level where when you get above it and you're able to hold it as support, as we did back here in August and September of 2020, that typically tends to be where the bull market gets started. At the same time, when you drop below this 20-week moving average, as you saw here in May, and then as you saw here in December, these times tend to be where the market heads into a longer trend bear market. And we made a video on this day here on December 3rd and then the 4th, talking about this 20-week moving average and the fact that we fell below and got a close below. We said at the time that, just getting a single close below doesn't necessarily spell disaster. But if you start getting weekly closes below that 20-week moving average, it means you're going to be looking at a period where you're likely at least going to need some time. So a month, several months to get back above. From that point, what did we do? We actually went below the 50-week moving average, okay? So we have that level drawn here. Now, historically, back here in 2018, when we fell below that 20-week, what did we do? We headed down to the 50. Okay, and then we eventually fell below the 50. And that's precisely what we did right here. We came below this 20-week and then fell down to the 50-week moving average out here in December. Now, granted, in this case, the 20-week and the 50-week were rather close to one another. And we actually essentially held the 50-week as a level of support back here in July and bounced off. And that's sort of the catalyst that we used to run up to our all-time high of 68K. But in this case, we dropped below that 50-week moving average. So what I want to do here is show you a level which, once Bitcoin has come down and started interacting with this price level, this has historically been a place where when we start interacting with it, it's basically been essentially the death spiral for the market. In other words, the market may not necessarily go down right away, but once we've hit this level, contacted this level, it's led to a massive correction in every single instance. So what I'm showing you here is the 600-day EMA. And I'm just going to run you through historically what's happened when we've hit this level. So back in 2014, we came down, we dropped below the 20, we dropped below the 50. All right. And then we came down to this 600-day EMA. And what happened when we got to this level? We rode along it for just a bit and then ultimately went on a massive correction from there. We went down about 63% from that point. Then let's take a look in 2018. The same thing happened here. We started contacting the 600 EMA. We held it as support for a time. But again, like I said, once you contact this level, it's spelled doom for the market, at least in the short term. So right from the time that we actually dropped below that level, we went down 50%. Notice on the other end of the spectrum, when we get above this level, when we come from below to back above it, this is typically spelled the beginning of a turnaround in the market. So here in November of 2018, we dropped below the 600 EMA and came down 50%. And notice in both cases, once we've dropped below and, significantly closed below, the move to the downside was rather quick. So within, in this case, within just about a month, and within the prior case, within, no more than several months. But in both cases, once we got back above that level, we were, at least on the longer term, on the move forward. And then notice here in 2019, we have yet another example. So we fall down to this 600 EMA. Once we start interacting with it, what happens? Well, we get back above for a very short amount of time, but then we come crashing below. So you saw this massive capitulation occur starting in March of 2020. We went down about 50%. Okay, then we got above, and yet again, getting above led to a rally in the market. But now notice what's happened. We're now sitting along this 600-day EMA, and we've got some closes just below it. But, this has happened before, like it did in 2018. We got a few closes below it, but, nothing significant. And I think that's what you're seeing now. We're getting a few closes. We've got a few closes below it, but we haven't had that true capitulation drop significantly below this level. So I think this is going to be an important level to watch, because ultimately the way things are going right now, crypto operates in the entire financial spectrum. So the things that are going on in the economy, they're going to directly affect the crypto market. And, I just find it interesting that we're at this level that's historically led to a massive capitulation. And at the same time, we're seeing that sort of the market setup is suggesting that things are kind of hanging on a razor's edge at the moment. And I think you're seeing that reflected in the market and in the prices at the moment, based on the levels that we're sitting at. So we're sitting at many of these critical price levels, and I don't think it's coincidental that it's occurring simultaneously with these events that are playing out in the global economy. So I think ultimately, nothing that has happened in the past has to happen again in the future. But that's the entire point of, performing price analysis. It's to attempt to understand how situations have played out in the past and adapt yourself and adapt your plan to those scenarios. So we know that we just recently came back up to the 20-week moving average, for instance. And we discussed on that day saying that we're above this 20-week moving average, but we're going to want to see ourselves hold it as support. If we don't hold this as support over any significant time frame, well, that's rather meaningless, because we've seen, if we just come back here, we got above the 20-week moving average here in July, and then not 5 months later, we dropped 50% in about a month. That's why we look at these charts. That's why we try and understand history. It's so that we can understand where we're sitting at now and adapt our strategy in relation to what's happening. So we know that there's sort of a mixture of events going on where we're in this shorter term uptrend. So we have an uptrend that's been forming ever since about January. We've been in this upward channel, but you also have these, more bearish type scenarios playing out. So ultimately, something has to give way, one or the other. And if I had to make a bet, it would be that we're more likely to break to the downside now, at least on the medium term time frame, than we are to go to new all-time highs right now. So ultimately, I think this is going to be an important level. I think this is going to be important to see that we don't get some massive capitulation down below this level, because if we do, then we're looking at a scenario just like we saw in 2018, just like we saw at the COVID event, just like we saw back here in 2014. This is what I'm going to be watching. I'm going to be watching to make sure that we don't get a large capitulation below this level. Because as we've seen in every prior cycle, granted, we have a small sample size, but everything that Bitcoin tells us is it operates in a very repeatable and mechanical fashion. We've seen in the past Bitcoin drop below, this 20 week, then go to the 50 week, then go to the 100 week, and then ultimately go to the 200 week. And, now we've seen it go below the 20, go below the 50, and it's headed down towards the 100 week. So I just think, to ignore these things that are happening and to ignore, what you're seeing in the market and what the market is telling you based on history, because, you know, YouTubers and people on Twitter and people on Reddit are telling you that we're still in a bull market and we're still going to go to higher highs in 2022. They try and ignore the situation for as long as possible until it's impossible to ignore. Those people have a vested interest in, saying things that are positive because people gravitate towards positivity. But at the end of the day, I would prefer to gravitate towards realism than, just selling hopium, because ultimately hopium is going to lose you money. Understanding where the market is, at least having a plan or, some sort of idea of what may happen, and therefore not being taken aback by it and caught off guard by it, and then you're panic selling, having something like that in place, I think is ultimately going to save you money. Telling you we're going to new all-time highs in, Q2 2022, that's not helping anyone, because I think the probability of that actually happening is very low. Now, if it does, I'll be just as happy as the next guy, because I assure you I'm heavily invested in crypto. But I have a plan in place. And, that plan involves dynamically dollar cost averaging into the assets that I consistently talk about: Bitcoin, Ethereum, and then a very small amount of altcoins. And that way, even if we do head down, that's fine, because I believe in the long-term vision of the asset class. So I'm willing to be sitting on a loss for some amount of time. And in fact, I'll just keep buying if we were to head down, and decreasing my cost basis along the way. Because I do think that, based on a lot of other things that we've seen, there's evidence to suggest that we will be at much higher prices, down the road, down in 2023, 2024. So I think it all depends on your time frame, your horizon that you are willing to be invested into the asset and potentially sitting at a loss. If you're someone who can't imagine sitting on a loss in the short term, well, then you're very likely going to be the kind of person who's going to capitulate, when things start to look shaky. So I just think you need to at least have an appreciation of where the market is and where the market has come from in the past. So understanding where we're at now, understanding the macro picture, and understanding that just because we're in this shorter term uptrend, this doesn't necessarily mean that we're, off to new all-time highs right now. Because I think there are a lot of other indicators out there that, if you're not just selectively choosing which indicators you prefer, but you're looking at the broad range of indicators and everything that we can see, I think there's a lot of suggestion that, if we drop below some of these levels, we could be in a place where we head to, some levels that people don't necessarily think can happen. And potentially, maybe they can't. Maybe, 33, 32K is as low as we can get. But to walk into the situation with the preconceived notion that that's 100% accurate and no other scenario can play out in either direction, to the upside or to the downside, I think is a way to go about the market that's ultimately going to get you in a lot of trouble. When you have an idea that one thing and one thing only can happen, I think you're putting yourself into a position where it can be easy to get yourself in trouble. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.